Hi guys, it's Thomas here from CO2base.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 19th CO2 report in 2015, and as usual we're going to start off with the changes in commercials position. So here we go. As you can see, we've got the feeder cattle on top of our list with a 39% change in commercials positions. It's a little bit difficult to see it on this chart, but the change is over here and it is definitely larger than average. I may even say that it is the largest change in the past 52 weeks range. And of course it is a bearish COT change signal, no question about that, possibly affecting prices in the near term. But let's have a look at the 5 years chart and see how extreme feeder cattle has become. You may see that basically we are moving towards bearish extremes. On this 5 years chart, you may see that we are a little bit far away from all-time or close to all-time extreme levels. But anyhow, we do have relative extremes that we can count on as well. Maybe not that many examples. So, but anyhow, if we consider the fact that we have a bearish COT chain signal and a relatively bearish extreme, then it seems that the market can turn downwards. I'm not saying it will. If you look at the chart, the last major relative COT extreme was actually bullish, and as you can see, prices have gone higher. I wouldn't say this is the best market or a market where we have very confident COT backup. So I'd rather move on and have a look at the New Zealand dollar, which is our next market, having 24% change in commercials positions, a bit larger, 29% change in large speculators positions. These changes are great changes. We only had 2 in the past 52 weeks range before that. It is of course a bullish COT change signal, maybe coming a little bit late if you look at the chart, but anyhow it's there. And if you look at the last time we had such a bullish COT change signal, it didn't really have an effect on price, and then the one earlier is again a signal that may have had no real effect on the market. So how about moving on to the 5 years chart and see how extreme New Zealand dollar is becoming. We've been moving towards bearish extreme levels from this bullish one over here a couple of month ago. It was actually an effective signal stopping the decline. We have had prices going a bit higher from there. And now we've moved to relative bearish extreme levels, but not significant extremes either way. So I wouldn't say there's a significant extreme to talk about. The last major extreme is still in place, I believe. It is a bullish COT extreme signal, meaning that we should be expecting higher prices coming in the next few weeks, month even. Dow Jones is our next market with a 21% change in commercials positions, roughly the same change size in large speculators. If you look at the chart here, these 20-something changes, percent changes in indexes are not that large changes. It's hard to talk about it. So let's just jump over to the 5 years chart and see how extreme Dow Jones is at the moment. And well, to be honest, there's no real extreme to talk about. So I think Dow Jones is not the market where the COT data is giving us any edge at the moment. But let's have a look at large speculators COT extreme and see whether there's markets where we have great extremes. And rough rice is still one of those markets with all-time COT extreme in large speculators position. We've talked about rough rice for the past few weeks now, and as you can see, even though we had these great extremes, the market could not stop its decline, and we're still moving downwards. So how about moving to a 10 years chart and see everything on a wider perspective? You may see that we have reached a significant support level, and that may of course be a signal that a buying opportunity is there. It's not an easy market, I must tell you. But anyhow, the extreme is there, and I think we should have our eyes on rough rice in the upcoming few weeks even. Lumber is our next market with 1,257 report extreme in large speculators positions. Huge extreme. No question about that. It is, of course, a bullish COT extreme signal. Small speculators are not an extreme level. Commercials are actually very close to their extreme. It is a bullish extreme. There's not much to say. If you look at the last the 5 years, you may see some very good, effective signals. So again, another market where COT extreme signals are good signals for us. I think that's all I could say. Lumber is again another market where we have opportunities. Corn, 66 report extreme, not that big of an extreme. But anyhow, let's have a look at it on a 5-year chart. Here we go. It is, of course, more of a bullish extreme. Generally speaking, grains, if you look at wheat, rough rice, all of them are actually producing bullish extremes. And we're not surprised to see it in corn as well. Maybe not that extreme, not an all-time, but if you look at the chart, large speculators are net short at the moment. And of course that means, looking at the 5-year chart, it is an unquestionable bullish extreme. So I'm not saying we are going to see a sudden change in the trend, but of course in the next few weeks or even month we should have our eyes on corn and see what to do. Okay, that is going to be all for this review. If you would like to have a look at other COT charts, don't forget COT charts is the page you should be looking at. Of course, just a brief review on the markets. But if you would like to have a more in-depth and detailed COT analysis, and of course, the page that we're analyzing week by week is where we should be working. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Bye bye.